You know, when you hear the name Pavilion attached to a property, especially in a prime spot like Mont Kiara, your mind immediately goes to one thing: gold standard, right? But what happens when that premium promise smashes right into a brutal daily reality? Well, that's what we're going to do today. We're going to dive deep into Pavilion Hilltop and find out. And that really gets to the heart of it, doesn't it? It brings us to this core question for any investor. We see a prestigious brand, a fancy name, and we just assume it's a guaranteed great return. But is that always the case? We're going to use this property as a fascinating case study to really unpack that exact idea. All right, so first up, let's talk about the promise. Because on the surface, Pavilion Hilltop looks like it has everything. And I mean everything going for it. It's in Mont Kiara, which is one of Kuala Lumpur's most sought-after addresses, particularly for expats. So what makes it seem so perfect on paper? I mean, just look at this. It's basically the investor's dream checklist. You've got freehold tenure, that's a huge plus right there. It's in a top-tier expatriate district, which practically guarantees a certain class of tenants. It's backed by the incredible reputation of the Pavilion Group, which is a massive seal of approval. And since it was finished in 2017, it's still a pretty modern development. It's the perfect pitch. Okay, but this is where the story starts to get a little bit complicated. Because when we start digging into the financials, we find this classic investment dilemma. The property is basically telling two completely different stories, one about its rental income and another about its potential for growth. Let's start with the good news, the really good news. The analysis shows an estimated annual rental yield of about 4.8%. Now, for an investor who's all about that cash flow, that is a solid, very attractive number. It points to a reliable, steady income stream, which is, a huge part of its investment case. And then there's the price tag. The median price that people are actually paying sits at around 985 ringgit per square foot. Now, this is a really key benchmark. It's a premium price, exactly what you'd expect, and it's the baseline we need to figure out the property's capital growth. So the big question is, has this price actually been going up? And boom, here's the other side of that coin. The hard truth is that capital growth has been, pretty much dead in the water. Prices have stayed relatively flat for years. And the main reason for that? The Mont Kiara area is just saturated with high-end properties. It's created this constant oversupply that puts a very firm ceiling on how much prices can possibly go up. So wait a minute. If the price isn't growing, how on earth is the rental yield so stable? This is where we uncover the property's secret weapon, its golden goose, so to speak. And the answer isn't in the building itself, but in what's just down the road. See, this property is an absolute magnet for high net worth expat families. And why is that? It's simple. It's right next to two of the country's most elite international schools. These families need big, family-sized units, which Pavilion Hilltop has, and they create this incredibly consistent, reliable pool of renters year after year. That right there is the engine that drives that 4.8% rental yield. But with every silver lining, there's usually a cloud. And for all its prestige, residents here pay a daily price that you just can't ignore: the traffic. And we're not talking about a minor inconvenience here. This is the property's single biggest weakness, and it's a huge drag on the quality of life there. And I'm not exaggerating. The source analysis does not mince words. It calls the traffic horrendous and a major livability issue. I mean, when you see language that strong in an investment report, you know it's a critical factor that's going to directly impact the property's desirability and its value in the long run. So what does horrendous actually look like day to day? Well, it looks like a morning traffic jam that can last 2.5 hours and then an evening one that stretches for 3. Think about that. We're talking about a massive chunk of a resident's day potentially just gone, wasted in gridlock just trying to get into or out of their own neighborhood. So you might be thinking, okay, well, are there any alternatives? The short answer is not really. Sure, on paper, the access to major highways is excellent, but that doesn't help you one bit when those highways are also jammed. And crucially, public transport is poor. There's no direct train access, which means residents are absolutely 100% dependent on their cars, which forces them right back into that daily gridlock. There's just no escape. So all of this brings us to what I'd call the investor's crossroads. We've seen the strong, stable income potential, and we've seen the serious lifestyle and growth limitations. It forces any potential buyer to ask themselves a really fundamental question. What kind of investor am I? Am I a yield seeker, or am I a growth hunter? And this table here just lays out that final trade-off perfectly. On the one side, you have these powerful strengths, the Pavilion brand, the freehold status, and that all-important rental demand from the schools. But on the other side, you have the severe traffic, the capped growth from oversupply, and total car dependency. The key point is you can't have one side without the other. They come as a package. And that leads to a very, very clear verdict. Pavilion Hilltop is a solid choice for a very specific type of investor, someone who wants to park their money in a stable asset and just collect that consistent rental income from the reliable expat market. But, and this is a big but, it is absolutely not for someone who's hunting for quick or even medium-term capital gains. The market conditions just won't support it. So we end with this question, and it really distills the entire dilemma down to a personal choice. For an investor, and even for a potential resident, it all comes down to priorities. What do you value more? The prestige of the address and the stability it brings, or the daily quality of life that comes with a stress-free commute? It's a fascinating trade-off to think about.